Hello and welcome to Share Talk. I'm Matt Brown. Thank you very much for joining us today. I am joined by David Galan, who is Chief Operating and Chief Financial Officer of Zinc Media. Thank you very much for coming on to the show today.
Thanks, Matt. Great to be here.
Well, let's start off. Zinc Media. Who are you? What do you do? Where do you operate? And more importantly, how do you make your money?
We are a TV production company based in the UK. We specialise in factual TV production. That means a lot of different things. We make programming that spans the range from daytime TV all the way up to sort of very high-end landmark documentaries. We have 5 different TV brands within our company. We're one of the largest indies, as they're known, in the UK market, and our strategy is very much to sort of consolidate the market and hoover up some of the smaller indies to become what's known as a super indie. We've just made quite a big acquisition for us of a company called Tern Television, which is based in Scotland.
Okay. You mentioned Tern and that acquisition. You've announced that to the market. And I think a lot of investors and viewers are probably asking what that acquisition means for Zinc Media and how you can actually change that company and what that company brings to your portfolio.
Sure. Well, we're obviously very excited to have made the acquisition. Tern Television is based up in Scotland. It's got 3 offices, one in Glasgow, one in Aberdeen, and actually one in Northern Ireland in Belfast. It specialises in factual, so it's very much sort of us sticking to our knitting in terms of what we do well. Scotland and Northern Ireland is actually really important to us. There's a big push in UK broadcasting to push TV production out into the regions. In fact, BBC committed to spend an extra £20 million a year on broadcasting in Scotland, on TV production in Scotland. So having the ability to produce quality factual programming in the nations is really important to us, and quite apart from the fact that they make great programmes and they're a really good team.
Understood. And just looking at Tern, their turnover has been quite impressive. We're looking at £5 million a year. I've got numbers here, but profit has been running about 300,000 bottom line profit. Do you feel, or investors are asking, have you overpaid for Tern, and at £300,000 per year, will you need to grow that profit to make a return on your investment?
I think there's a couple of elements to that question. The 300k profit, that is a bottom line profit. The metric which we very much judge ourselves and look at acquisitions by is EBITDA, and their EBITDA is a little bit higher than that 300,000. Secondly, the way we've structured the acquisition, there's an element that's paid up front, and there's an element that's paid over 3 years on an earn-out. That earn-out is based on EBITDA targets each year, and the EBITDA targets are higher than the 300.
Gotcha.
So we would very much expect that 300 grows each year, which means then that the price of a deal looks very different, and if they don't perform, of course, we don't end up paying the full price.
Super. And just moving away to another part of your portfolio, and I believe it's Blakeway North. It's had a BAFTA nomination for one of its children's documentaries. I believe this, would I be right in saying this isn't the first BAFTA nomination for your stable, is that correct?
Correct. We've had 6 BAFTA nominations in the last 3 years. So, you know, it's testament to the quality of the programming that we're regularly nominated and recognised by BAFTA. It's great for the business, it's great for the teams that work on those programmes, and industry recognition obviously is a great way to get commissioned on new programmes. So we're really happy to get that recognition and hope that we get plenty more in the future.
Understood. And for shareholders and achieving value for shareholders, what's the plan now? Obviously with the Tern acquisition, that's done. Are you looking at other acquisitions, or are you looking to, at the moment with your portfolio, to boost the revenue within that portfolio rather than go hunting for other production companies?
The answer is that it's a bit of both in reality. There's plenty of work we've got to do internally to improve our margins. We actually reported our results a few weeks ago, and it was actually the first time that we turned a profit at EBITDA level in 7 years. So we're starting to produce better results financially. That will continue to improve. So there's a lot of sort of self-help we can do without looking outside. However, we do want to make more acquisitions. We think that there's a really strong argument to consolidate what is a very fragmented TV production market. We're also still quite small for an AIM company, and we want to grow our market cap. And we believe value will come as we grow, and certainly our profitability should increase significantly.
Super. And we were talking off air about the history of the company and Zinc Media, and you mentioned you moved away from print, and obviously we've seen how print has changed, and really isn't the medium to be involved in, and certainly digital video it is the way forward. So you've obviously got your ear to the ground in how the market's moving, and it does feel over the recent years with the likes of Netflix and Amazon, and the structure is changing within television. Certainly we look at revenue streams coming from advertisers when you look at ITV, and maybe certain problems for them at the moment and going forward. With that environment changing, how are you positioned as a company to benefit from these changes?
So starting at the sort of beginning of your question about the move away from print publishing, I think it's not underestimated how difficult the restructuring that we did in our business over the last couple of years was. When I started in January 2016, the print publishing side of the business was actually bigger than the TV division. We've actually exited from predominantly from pretty much all of the publishing businesses to focus on TV, which is where we think the growth is. TV market has changed massively in the last few years. A few years ago it was BBC, ITV, etc., Channel 4, who were the buyers in the market. Today there are many more buyers, and some of those buyers are incredibly large. Netflix, Amazon. I read a stat a couple of days ago. Netflix spent something like £7.6 billion on content last year.
Yeah, it's incredible, isn't it? Huge numbers.
Absolutely incredible. So we're not bound anymore to go to the traditional UK broadcasters only. And in fact, we're making good progress at approaching those international broadcasters and platforms. In the last year, we've made programming for National Geographic, HBO, Smithsonian. We're starting to look at Netflix. So there's plenty of room in the market for good content makers. The expression "content is king" has never sort of been more true than now.
Fantastic. Well, on that note, thank you very much for providing us with some content on Share Talk today. It's been an absolute pleasure speaking to you, David. Thanks very much for joining us.
Thanks, Matt.